This is Stavros Tousios for M4Markets. When I have a quick look at WTI oil and dollar against the yen today, there is an interesting pattern forming for both, and it looks like the currency dollar pair, dollar against yen, might follow the pattern that oil is doing. Oil has been in a, bearish trend, as we can see, and it is important to mention that in the longer term, we have to draw this channel, and see perhaps where prices could in the medium term go and break above that line. Until they do, the medium term trend remains to the downside. Okay, there is evidence of a potential reversal because we have a divergence here, and then we've had a move to the upside that after doing a triple top at the RSI and of course 3 peaks on the price itself, we started to fall. Okay, now it is important to mention that when we see price action taking this formation, usually we do a pullback. Okay, and one level to watch always, it's the 50%, which suggests it just might be a correction, right? Which means we're going to get something like this, and as long as we remain below that level, then most probably going to go lower from here. But in the shorter term, okay, the expectation is for a correction down to 50 or 61.8, and from there do another leg to the upside until we see what happens here. Now, since we have started to fall over here, it would be possible that we are going to go to oversold territory again, and from there, with prices falling, maybe we're going to get another signal. Okay, and this is a hidden bullish divergence, guys, and usually when these two signals appear, okay, this is a better indication of potential reversal. Okay, so if we follow this sort of guideline, okay, there will be more chances that we break that channel rather than not. If we don't see a second signal popping on the RSI, then most probably it will be a case where, two cases. We are going to continue lower down, so which means we're going to break below the 50% over here. Okay, which means sentiment is going to change to bearish at 78.50, and go towards 75, and then break the previous low. Or the other case would be that we're just going to go around that territory and then start moving up. This sort of I would see as a crawl up effect, pretty much, and with the first target, of course, 83.50, then 84.70, and then you go to around 90, maybe even is going to fail 90, and from there probably fall again. Now, why is dollar yen interesting here? It's because dollar yen, in the longer term, you can see there's been some sort of, in the medium term, sort of move to the downside. Okay, usually moves like this end up being in 5 waves, so there is potential for more downside. However, in the shorter term, we might see some sort of upside price action taking place here. Now, what are the similarities here with oil? Well, we are seeing a divergence currently, right? We have had 1 and 2, and going up here, which means that would mean that we are actually going to see the first peak on the RSI. So oil has already done that 3 times here and then started to fall. So if dollar yen does something similar, then it means that we're going to see another leg to the upside, probably a short-term divergence on the RSI, and then continue lower from there. Okay, so when we are looking for a potential move to the upside, okay, and after having done quite of a deep retracement here, we again look at the 50. The 38 is already done, so the next level to the upside could indeed be the 62. Because usually these 2 legs are equal in length. Okay, so if we did 38, then the next one is up to 62. We need to break above the 50, of course. So all these levels are kind of important. Now, the other thing to mention, guys, is that because we need to look at the medium term as well. If we go up, only if we break above this trend line can we start thinking of a potential reversal. Until then, there is nothing to see. This one is a shorter term trend line that we need to pay attention to. Okay, which means that in case we do see a bit more upside, we could go there, then start falling, and from there we see what happens. Either we stop here and we continue higher, or we're going to go for a fresh low, and then we're going to get another signal on the RSI as we suspected we could get for the prices of oil.